highlight today is we had a weak market, and everyone's going to be inclined to try to fade a move up or a move down. There's nothing wrong with that. But you have to have a good qualifier, and you have to be consistent at keeping yourself out of trades that just aren't going to rally, and you want to buy these dips, but also put yourself in a position to stack probabilities. Call it prediction with a probability. And when you're trying to buy a market that breaks, a lot of times people try to buy it for one reason: they missed the short. That isn't a good reason to buy it. So just know that if that's what you're trying to do, so you miss a market that broke from here to here. So what you try to do is buy it here and have it go back to where you missed getting short. So your mind could say, "Ah, don't worry, Jimmy. We'll make up for it just by doing the opposite." That's not the reason to get bullish. However, there's nothing wrong with fading a move lower because you always get rotations and turns, even in a down market. But it's really important to set up a qualifier so you could predict with a little bit of a probability and you could fight for your location. So with our puke tool, what we had seen as it was coming down is a bunch of longs that puked, which is what you want, less competition, and simply some shorts coming in and some big sellers that couldn't get the market to go down. I think I rewound this to the point I want to talk about right there. So as soon as it got these shorts that came in, once we get above it, there's fuel that it'll continue up. But then we had this big long puke, which if you look at the 8 hour was the biggest at the time long puke of the session. Long puke just means longs just covered to get out. They cried uncle. All right. Big sellers are these red boxes. Big sell orders that come in aggressively, a sell market order for 100 or more. We put a red box on it. This was 200. What you want to see when sellers come in is the reaction and relationship between an order and price. And when it doesn't go down, and it should because a big sell order came in, it's a head scratch moment that it could be a bottom. And you see me start illustrating and everything else down in here. I didn't catch this. I was looking off at something else. So this was one that you had to be pretty quick to catch. But if you're looking for it and you're know what to look for, there were a couple people that caught it. I was late and I still seen it a few ticks off the lows. And this wasn't like a trade that was going to go up, up and away forever, but it was a medium term, bounce for the market to, put yourself in a position to fight for a decent fade. You don't have to be right all the time to make money. You could be wrong and make money if your locations are good. But you got to practice and set up drills and those exercises to look for the right stuff. And that is seeing longs puke, shorts get stuck, big sell orders not being able to get price to go lower, and then you see this rally come out of the hole like that. You don't have to be right for 10 or 20 points. You got to be right for one or two before you're right for 5 or 10. And a lot of people look for 5 or 10 or 20-point winners, and they're not finding good locations, and they're risking too much. And then when they're wrong for long, and that's no way to trade. Even if you have the capital to back that up, nobody really has the emotional capital to take a lot of heat. So you want to fight for your location. You want to develop a bias and then look to execute that bias, but you're also going to fight for your location. And you're fading. That's all right. Just don't be bullish all the way down. And then, you see this, I think later on in this particular recording, we had the market right here when you're like, well, how about getting short and selling it with a breakout? Well, you want some longs to come in and get underneath it. And when I fast forward it, what had happened right in here is a bunch of longs came in. You also see it up here. And that's kind of what you want to see. Below it, they're the ones that are in trouble. And we were able to kind of leak lower and then stay below where they got stuck. And then the market, I stopped the recording, but the market continued lower. Even though we were getting some longs to puke, you were just getting too many longs coming back in here, up there. It's all about the relationship of other people's positions and where the price is, different orders, different dimensions of the orders, what the intent of an order is, what the relationship between the price is to the order. And this is all order flow stuff. And if you're doing all kinds of YouTube searches and Google searches on trying to read order flow and it's not being talked about in the ways that you hear me talk about it, then it's not going to help you. It's all order flow fluff. You have to, order flow is all about the intent of the order, if it's opening up a position, if it's closing a position, what's the relationship to price when it gets hit with that order. You're following the one guy punching the other guy and his reaction. Are these punches landing? Are they having an effect? That's what big buy orders, big sell orders are about. They're like punches that a fighter is throwing. And if you're astute at watching two guys fight, you really get a sense on if the punches are landing, if they're having an effect, when they're having an effect, and as the fight goes on. Um, and I think a lot of people miss that when they try to read order flow. They're distracted with a lot of things that are pretty much either irrelevant or way too much data and information to try to wrap your head around and create what I'll leave you with, and that is PWAP, prediction with a probability. Stay safe.